How are you guys doing? Welcome back. Today is March 13th, 2022. It's going to be an interesting week in the market. We'll discuss that in a minute. If you're wondering why I have my contacts in today, one, I need to get used to that again. I had a mean streak in me just keeping them off because of allergy reasons. And two, I'm going to go see Batman later. If you put spoilers in the comment section, I will find you and punch you in the throat. We ain't about that life, boy. It's going to be a good movie. I'm pretty jacked. If you are new here, what's up? My name's Evan. This is By the Bulls Trading. They also have to call me AKA Bear of Cats. Meow. And also have to call me my mommy's favorite. That's a great one. Also, a lot of folks call me John Stonkton.
Pulls up, three-pointer. Bang! Bang!
Chef Boyar Swing.
Hey, Mambo. Mambo Italia.
And of course, Bruce Springsteen. All those added together beautifully. That's the kind of morale and fun we have on this channel. Woohoo. If you are going to be watching the full episode, it means the world to me. I have 25 free lessons for you on my YouTube channel. Go check those out. It'll help you kind of understand what I'm talking about here if you are new to trading. But also it has some great stuff. We discuss risk management, technical, fundamental, mental analysis, goal setting, talk about macro markets, actually running a trading plan, and then planning a trade, and of course, trading that plan, and of course, consistency. Those 8 things make up my trading structure. My trading plan, my trading system that I usually like to use is based mainly off technical analysis. We're going to talk about in this episode supports, resistances, trend lines, patterns, EMA lines, the volume profile, RSI, and the stochastic indicator. These 9 things plus love, bud, it makes up my trading system. So if you want to learn more about the difference between a system and a structure, check out the course. If you enjoy my content a lot, go check out the description box down below. I want to go move my glasses. I don't have them on my face. Go to the description box down below. The Discord Patreon's still available. It doesn't charge till the first of the month. Go enjoy yourself a free trial, basically. Until then, if you want to learn more about my morning newsletters, nightly newsletters, early film access, picks early, constant contact with me, my sick meme game, all these kinds of great things, check it out down below. If you don't want to, that's great. I would just ask and return them for a like, subscribe, and a bell notification, especially the subscribe. My confidence and my ego is tied directly to that. And so if you could boost my confidence more, that would be great. To encourage you to do so, I'm going to give you 5 seconds to scroll off my big stupid face. And of course, go like and subscribe. To encourage you, here's some horribly awkward eye contact to encourage you to get off my big dumb face and subscribe. Let's do this.
Prolonged eye contact. 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 Prolonged.
So that being said, 8 great picks today, some of which you probably never heard of. Some are great pivot points for a breakout or a short. Some of them are just great values. Overall, a lot of great stuff in this episode. With no further ado, let's go do this together, boys, ladies, gentlemen, girls, everybody. Let's get into it. So first is ACAD. Don't love this sell-off, but of course, this uptrend's absolutely beautiful. You can't really consider this to be a channel up. It's close. I mean, one could easily argue there's some form of channel up here, right? But I wouldn't put too much emphasis into that. Let's start with our support, though. Also, notice my cat's horrifying face right now. Oh, he back to sleep. He had his eyes open. That was weird. We can see with this, though, our old resistance area right here became a support, and then became a support twice, and now it's holding up once again. Yes, there's this weird options candle, just kind of stop loss hunting here that kind of clicked, but overall, besides that, the support's been very strong. With that, our resistance is also super clear. This 24.80 area, 25 bucks, call it flat, is really a good resistance as well. The risk versus reward becomes evident. Risking 2, maybe 3% here to make at least 7%, hopefully 9 with a good move, and a really good move can give us somewhere near 18, 19%, making a solid, you could probably argue, 6 to 1, 5 to 1 kind of setup here for a small move. Our trend line is gorgeous. 1, 2, 3, 4 solid hits. I mention that because any one of you, any one of me, can draw a trend line from A to B. That's not difficult. But A, B, C, in this case, D is much more consistent, and we can go off that much easier. And so we can see with the 1, 2, 3, 4, even 5 solid hits, it's much more consistent. So the trend line's also very pure here. The only issue that we do have currently is our volume profile line is gravitational. This is going to be our POC. It's the highest volume node on this time frame, and it wants to pull us down to it. The good side with POCs, though, is that they're going to be our best support. And so you can see clearly ACAD's volume profile is a very strong support. If this does drop to like $21, this is going to be a mega strong support play. So you want to wait for that, great. Otherwise, I love this trend up. I love the support. I love the clarity of this play. Low risk, high reward. Overall ACAD. I do love what I see. Let's check our indicators. If you are new, you may not understand how indicators work best. And the way we talk about it here is MTVV, like the channel plus a V. Indicators show us momentum, trend, volume, and volatility. That's it. And these indicators that I use with the EMA lines, the 10, 50, 200, the RSI, the stochastic, and the vortex indicator, show me all four of these things fairly quickly and helps me plan a trade. It helps me plan a trade and then trade that plan. When it comes to entries, when it comes to exit, when it comes to planning and macro markets, all these kinds of things, indicators are great, but again, we don't rely on them. It's just the icing while the TA is actually going to be the cake. So don't get too caught up in this, but if you are new, you'll see live what a veteran does with their indicators. Let's do this together. So we can see a 200 cross is really good. When you get over the 200, you have your best times. But also when you're below your 50, it's going to be a mega strong resistance. When you're below the 50, even 10 crosses become rare and not nearly as strong. So if you want to do a quick swing here, wrong button, idiot. You want to do a quick swing here over the 200 until the 50 makes a lot of sense, right? You break over the 10, the 200. That's a fine crossover play for a 200. The 50 is going to be a hard resistance. Until we're over that, we're going to have a pretty bad time. So you have two options here. Most beginner traders, you can enter the stock two ways. First is value, simple. The price drops, you buy in, good. The second is momentum. You cross an EMA line, you cross a stochastic indicator, you're crossing the vortex. Something goes from red to green, you enter that way. So as we go through this, remember, value and momentum are the two ways for you to enter a stock. I think currently we have a great value entry. Why is that? The TA shows it. I think, again, 1.5% lower is best. TA shows it. EMA lines show they're all above us, so we have a good value. RSI is at 40. A bit lower is better, but it's still okay. The stochastic is low. I don't see any clear bullish divergences. That's all lower lows. That matches up. All lower highs. It's just a good value. There's no life yet. The blue line has these kind of curled just a little bit, but we're getting to a great value nonetheless. Bulls and bears are tied. If bulls cross under, we'll probably be seeing that $21 range. So I think either way here with ACAD, a crossover is fine. A value purchase is fine. Only thing that you have to do at this point is watch list it and then make your own plan. If you like it, great. If not, no big deal. But ACAD, I do love what I see. I would definitely watch list it. Next is CVET, CVET, Covitris. As we can see, a really nice downtrend. It was coming down beautifully. Boop, 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 boop. Eventually broke out, and now we're going to start consolidating sideways. All this information kind of goes out the window. We're taking this little small slice of like 5 months here. Anytime we get towards this volume profile line, 1655, we get close to it almost every single time. It bounces beautifully. It's important to note, though, every single time we got into this area, minus maybe over here, the candles have wicked back up just a little bit or even started to reverse. That is yet to happen over here, right? We can see with my horrible clicking, we have not yet started to show any wicking and coming back quite yet. So we do want to see a quick reversal. We don't see it yet, so I'm not going to rush in here. Earnings, overreacted, coming back down. Even here, you can risk 1, maybe 2% at most to make at least 10 or 11 for a small move here. Good support, no trend line. I mean, I'm sure you could probably find some resistance trend somewhere in here that's showing lower highs. That's fine. But our POC, once again, is going to be gravitational. It's going to be a strong resistance. So getting over $18 may be a little bit rough. But just hitting $18 gravitationally makes a lot of sense. So CVET, what we're lacking in really good like trend up like the last play, we have in simplicity. If it holds 1635, go long. If it breaks down below 16, I'm probably going to cut. Let's check our indicators together. It's all good in the hood over here. Let's see. We got a 10 cross is fine. It's fine. A 50 cross, again, is fine. You got to see a 200 break eventually. The 200 is going to be a major resistance. Until we have that, we're going to kind of have to be day trading and short-term swinging here. I mean, like 2 or 3 day holds at most. So could you wait for a 10 cross? I wouldn't. There's been very little evidence that it really has stupendous moves compared to risk versus reward. I would buy into value. We have value because the TA shows it anywhere near 1635. EMA lines are above us. We have RSI coming down to 37, good deal. Stochastic is low. Wait for it to kind of get down probably closer to negative 74. And then bulls are low, bears are high. CVET is a great value entry. Again, it may drop more. This is not ready to play tomorrow. If tomorrow's a red day in the markets, there's no reason CVET should be entered unless we see a really nice reversal here. But CVET, a great value entry for a small support play. Overall, I do love what I see. I would definitely watch list it. Next is Deere, DE. This is a short as of right now. The reason being, there is very little evidence historically that it can survive over 390. Now, would I go long on Deere lower? Absolutely. 330 to me, 338 is an absolute steal for Deere here, but has no history of getting any higher. The price target is 430 professionally. It's only 10% away. I mean, it's nothing too great to look at. It ran up massively, starting to consolidate, but it's been having recently lower lows. Obvious earnings overreaction in both directions here. This support's holding fine as of right now, but I think we have a lot of gaps lower that I want to kind of see get filled. And I think this is a really uncharacteristic move. It doesn't do this very often. It's not going to last. If I could see 394, 395 start shorting, risk 1, maybe 2%. A good short would give me a 4-1. A great short would give me almost close to 10-1 odds here. If Deere breaks out, which I think FSK is a breakout play at this point for me, if it does break out, I'm not going to be upset. I could easily just switch directions and go long. But I think John Deere here is an easy short. Let's check the indicators to help us figure this out. When it comes to our indicators, if we lose the 10 EMA line, that's our first true sign of weakness. When we cross under it, it collapses quite a few times. So you want to wait for that. That's definitely not stupid. Let this bad boy run up. Let it kind of keep going. The 10's going to keep going up, and eventually the crossover will be really close. So I think a 10 cross under is fine if it keeps running up. RSI's overbought, stochastic, wildly overbought, and it's starting to kind of curtail down. If that's the case, you may start to see a bearish divergence form as it's a double top on the stochastic, but a lower high. So we may see this kind of form here. And again, bulls just crossed over, bears just crossed under, but we can see the bears are pointing up. Bulls are kind of starting to slow down here. But overall, DE, it's overbought. Now, again, if you're going to play any kind of breakout play, yeah, overbought kind of is implied when you break out, right? So I'm not going to say this is like impossible, it keeps going. But I think that at this point, given the earnings overreaction and the no life at all historically above the spot, DE, risk-wise right now is an easy short. But if tomorrow the markets are green, steel's green, farming's green, wheat keeps going up, it may be a really easy breakout. Do your own due diligence, but overall, DE, I would definitely watch list it. Next is FSK, FSKKR Capital. This is also a breakout. Now, the reason this is different is because we can see my price targets for my patrons, but we can also see it has clear higher lows across the board, right? This is a great trend up, 4 solid hits pushing into this area. Deere did not have that. This is a really nice higher lows, and the consolidation has taken a lot longer, so I think this has a better chance of breaking out. With that, and I just think that, the consolidation next to the resistance with higher lows consistently is much more bullish than just a really rapid move up, then a big move down, then a big move up. It's been hugging the spot consistently. Also, the risk versus reward tomorrow could be extremely minimal. You can wait. You want to short this bad boy, you can put a stop loss at 23.73 at all-time highs, switch to go long, or, you can just clearly see, you're risking 1-2%. That's a 4-1, 5-1 play. A full move down is, again, almost 12-1, 11-1 odds if you risk a percent or two. Overall, FSK, it wants to break out, which I think is pretty cool. I also just mentioned that's a shorting plan. Sorry, my bad. I got confused there for a second. But FSK here, easy breakout if it keeps going up. Easy short as well. But overall, I think if it does get some strength here, it should be an easy breakout. Just like Deere, it can go either way, though. FSK, as long as we hold the 10, we're good to go. As soon as we lose that 10, I would get weary. But even then, if you hold the 50, you're pretty good to go as well. So long as we have the 10, you're good. 50 is also fine as well. RSI's up there, stochastics up there. No real bearish divergence, no bullish, it's fine. Bulls just crossed over, bears are low. FSK, again, can go either direction. If you are a breakout trader, this could be amazing. If you wanted to buy into value, this could be not so great. I don't love breakout plays. I did call Aflac and Hershey, both were fantastic. But I think that if this does get strength, if tomorrow's green, breakout. If it's a bad day and it's red, easy short. But either way, FSK, low risk, high reward either direction. Overall, I do love what I see. Next is MKSI, a simple support play. So the same exact conversation we had for CVET goes here. We have a really nice volume profile line, which acts as a support. Every time we get below it, it wicks back quickly. 140 is a strong support, and we were to zoom in over here. Look, you could easily risk, at most 2, maybe 3%. To hit our POC right there is a 2 to 1 easy. To hit our resistance is about 3 to 1, and a good move will get us somewhere near a 4 to 1 or a 5 to 1 odds. Again, what we lack in convergence, where we have the POC being support, it does want to pull us higher, which is nice. But you don't have trend lines or any of that. We just have a simple support play. If we lose the 140s, maybe the 139s, you get out. It's an easy play, easy risk versus reward, 4 to 1, 5 to 1 kind of odds. Volume profile wise, it's at the bottom of this D area. It's fantastic. When we go to our indicators, a 10 cross is fine, 50 cross is fine. Unless you're over the 200, it's pretty worthless, especially the 10 crosses. While you're below the 50, they're pretty worthless as it is. So, I mean, would I wait for a crossover? No, I want to buy into value. I think we have value pretty well here. RSI's at 44. It could be lower. But again, if we are going sideways, which, I mean, this is where the sideways started, it's only down just a bit. It makes sense. It's fair value here. But the stochastic is low. Bulls are low. Bears are high. But the stochastic does reverse closer to 67, or sorry, negative 67, 70 area. So I think waiting for that to kind of come down a little bit farther, maybe in the 138s in reverse, does make some sense. So I think MKSI here is not quite done dropping. It may see another 1-2% pretty easily. At that point, it becomes a very easy buy-in. I would watch this, definitely like it, but I want to just make sure I get a little bit of green before I rush in. But MKSI, overall here, I do love what I see. Next is OFC. This is a very easy short in my book. This is a broadening wedge. What that means is that you have any play that does this, where the supporting trend line and resistance trend line don't actually line up together perfectly. It just means a new pattern is going to form. So what's usually going to happen here is A, it's either going to hug this resistance and start to make action off of it and make a new pattern, or B, it's going to drop down to this area and make a new pattern down here. This is not going to last forever. You're not going to see OFC making moves to 23, then to 29, then to 21, to 29. It's not going to last forever. So I think a new horizontal play is what we're going to form here. I think where you tapped up here, showed very little life, coming back down, easily could be a 5% move. A good one's closer to 10. And here you can risk a percent or two. Give me a 1 or 2% short here. If it doesn't live, easy money. The POC wants to pull us lower, which again may only give us 2 or 3%. But at least there, our worst case is breaking even. But overall, there's no life above $29. It just wicked up there. It didn't show any life. It never does. It always comes back down. OFC earnings ran up too quickly. It's going to come back down. In my book, it's an easy short. When it comes to our indicators, if we get a 50 cross over the 10, that could be a good sign of life here. The issue is it's done that before, and every single time it gets kind of choppy, especially in a downtrend. The 200 is pointed downwards. It's a trend line. The trend is down. So even when the 50 crosses over, it doesn't really mean much until the 200 goes back up to being positive. So I think if you want to wait for a 10 cross under, that's fine. If you lose that, that's the first real sign of it dying off. But I think this is a great value short, which means RSI, it's high. Technical analysis, it's high. EMA lines were high. Stochastic, it's up there. Clear bearish divergence forming. It's a clear bearish divergence. Love to see that. And then bulls peaking out, doesn't get higher. Bears never gets lower. OFC, of all these, are the easiest short so far. If tomorrow's a red day, my first look is OFC. I don't think it's any chance up here to live. Now, could it break out eventually? Sure, but I'm saying the next 3 to 5 days, it's an easy short. I want to see this bad boy die and burn. OFC, I watchlisted it. I do like what I see. Next is SHOO, Steve Madden. They make shoes. I think that's kind of why the play in words here. That's pretty funny. Again, just like our play with CVET and MKSI, I believe. I forget. I'm dumb. Is a very strong support play. Anywhere near $38. All right, you get towards $38. Guess what? It holds beautifully. It does just fine. Risking 2 at most percent to make to our POC, which is gravitational, wants to pull us higher. 4 to 1. The resistance is 5 to 1. A solid move here is 6 to 1. A full one is 9 to 1 odds overall. Steve Madden. I mean, if some folks want to, spend their money, consumer cyclicals, it could be fine. Low risk, high reward earnings, overreaction. Starting to find a support here. This is a very good play. It's like the play for iHeart I took last week in ST. It looks really good. Simple play, not going to hamper on too long. I do love what I see. 10 crosses are fine, but when you're below the 50, they're pretty worthless. Like, oh, I crossed a 10. Wrong, stupid, bozo, every single time. So when you're going to wait for a 10 crossover, a 50 cross works as well. I don't think any email line crossover is palatable because the 200 is being a fat resistance here. But overall, for value entries, RSI it's low, stochastic it's low, bulls are bottoming out, bears are super high, and the TA, it's definitely at value. SHOO, risking 2% to make 9 or 10 times that is always a great pick in my book. You may not have the convergence, you may not have supporting trend lines, yada, yada, yada. But in a more bear market sell-off, it is what it is. You'll take what you can get. Easy support play for a beginner. I love what I see. SHOO, I'd watch list it. And last is VNO. I'm not going to harp on this one either. It is the same exact setup as OFC. You can see they're both real estate corporate office trust, and this is a real estate trust. The setup being the same is not coincidental, I assume. It's probably very similar. It's just probably different leverage. This is $46. This one is $28. So, I mean, this is a really good 1% every 3 month kind of REIT. And this one, again, is pretty similar. 53 cents, 46. They're about the same kind of payouts across the board. It's a good REIT to buy into. But again, risking 2% at most to see a short of 8 to 10%, even 20 for a good one is fine. It's the same exact setup as OFC. Even the POC is right here pulling us lower. I'm not going to harp on it. It's the same exact play as other ones. It's just a different level of price. And of course, you get a really good short on it, a different level of gain here. But same kind of risk versus reward idea. 10 cross under, again, works really well. You cross under the 10. First real sign of it dying off. If that happens tomorrow and we lose the POC, we're good to go. When it comes to shorting because of value, bulls are high. All right, bears, there's no real bearish divergence. It all basically checks out pretty well here. No bullish ones, it's just showing left and now it's starting to slow down. Bulls are high, bears are low for a short. That makes a lot of sense. VNO here is the same exact step as OFC. It's just a different price as a different company. Maybe they have different EP ratio or EPS ratio and P ratios, whatever it is. But I think that for a short, VNO makes a whole lot of sense here. I would definitely watch list it. Thank you for being here for the whole episode. It means the world to me. Thank you so much. We'll see you guys tomorrow for another episode. Check out the Discord, Patreon, and website coming soon. We'll see you guys later. Thanks.